To get back to the markets, all three major averages notching all-time highs. That took place yesterday. Join us right now to talk about it, Sylvia Jablonski, Defiance ETFs CEO, Chief Investment Officer. Good morning to you. We've been talking all week about what has been a remarkable ride as it relates to the markets. The question is, of course, does this all keep up? And I would just ask you, to some degree, how concerned you are that effectively the markets keep rising on what seems to be the back of ultimately bad news in the context of data. And a lot of this seems to be propelled by the idea that the Fed's going to lower interest rates.
Well, good morning, Andrew, and happy belated anniversary to all of you. I think that there are some reasons for concern, right? The jobs number came out, and I think that, we're looking at the first time that the Fed feels confident probably about the next rate cut or so, or potentially two more. But the backdrop is still pretty good. Corporate earnings were solid this last quarter. Forward-looking earnings look good. The consumer, yes, job numbers are weakening, but the consumer has remained strong in spending. And I actually think that the market is not rallying because the Fed is about to cut. I think that the market continues to rally because of corporate earnings and because of the future story really around AI and infrastructure and the continued opportunities there.
Well, let's go there then, because one of the big winners this week has been Oracle. Stock was up 36%, come back a little bit. There are some questions, and probably reasonable questions to be asked about the fact that, for example, in Oracle's case, one of the reasons it's moved so much is OpenAI has a massive contract with them, and yet there are question marks about whether OpenAI is making enough money, basically bringing in enough cash, which apparently it is not. It's going to have to continue to raise money to effectively fund some of these data centers and other things that they're doing with folks like Oracle.
Yeah, so I think that's just one piece of it. Like, if you look at the run in Oracle, that tells me that that stock was potentially undervalued all of this time. And if anything, consumers who saw that earnings report came to see that we are in this infancy of AI. And to your point, yes, OpenAI is 300 billion of it, but they have about 455 billion worth of forward-looking contracts that will monetize revenues for the company. They have 77% year-over-year growth in cloud. They're expected to bring in 144 billion worth of revenues into cloud by 2030. I think Oracle has really positioned itself as a staple in AI. It was a company that, almost like IBM is big in quantum, right? Oracle was a little bit forgotten. I think now that they're very much the backbone and infrastructure of AI. And so I think that as you continue to see growth in AI, machine learning, training AI models, and all of these things, that company stands to participate. And if you look at their market cap now and think about these, billions worth of revenues that are coming in, they're pretty close to joining the $1 trillion club, actually. So you might have another stock to look at here for that.
Oh, I'm not suggesting, by the way, that Oracle, I believe, should have always probably been participating in this to some degree in a way that the market didn't give them credit for. I think the larger question is whether all of these AI companies are just going to have to continue shoveling cash, and for some of them, raising cash. So an OpenAI or an Anthropic or all of the whole startup universe is going to have to keep raising capital, and some of these others, obviously, that are throwing off cash, the Microsofts of the world, Amazon, are going to keep investing it. But is there going to become a moment at which the market is not going to reward people for spending?
Well, I think we're pretty far from that moment. I think it's a fair point, but that will come as the sector begins to become, fully mature. And I think that we're still 5 to 10 years away from kind of, full scale commercialization, right? We have to hear about the S&P 500 monetizing from AI and how AI is actually helping their top and bottom lines in the next earnings calls for the next 5 or so years. So I think that money will continue to be there. A lot of the investments from the hyperscalers and from some of the MAGA 7 companies are very much going into AI. We saw that this last earnings season. And so I think they will fund what is needed to build out this infrastructure. And I think that trade still exists. So to your point, eventually it could top out, but I don't think we're anywhere near there.